Welcome to the deep dive. Today, we're plunging into a company sitting right at the crossroads of two massive and seriously energy-hungry industries, Bitcoin mining and AI data centers.
A potent mix.
Exactly. We're talking about Iris Energy, ticker symbol IREN. And the big question we're asking is this a powerhouse ready to dominate, or maybe a power outage waiting to happen for investors? Last time, we explored the fascinating world of neo-cloud computing basics. Today, we're directly connecting to that conversation. We're focusing on the green energy that's literally powering this revolution and, how Iris Energy fits into that crucial picture.
Yeah, and it's an incredibly timely discussion. As of, well, mid-September 2025, Iris Energy stock has seen this really significant surge. It's up, 224% year to date, largely on AI momentum.
Oh, 224%.
Yeah. So this isn't just some niche player anymore. We're talking a $9.2 billion market cap company, stock trading around $33.96. So today, we'll unpack their unique origins, dive into the leadership driving this growth, analyze their current financials, weigh the bull versus bear arguments, and really explore how their unique renewable energy edge defines their whole trajectory.
Okay, sounds like a plan. Let's begin our deep dive. So let's start right at the very beginning. What's the origin story here? Was Iris Energy really a garage startup for Bitcoin or something else entirely?
Not quite a garage, no. Think more like remote Canadian hydro dams. The company was founded back in Sydney, Australia in 2018 by two brothers, Daniel and William Roberts.
Okay.
And they spotted this huge opportunity in what they called stranded renewables. Basically, abundant green energy sources, mostly hydropower, that were just located too far from major cities or existing grids.
So cheap power, but hard to use.
Exactly. Incredibly cheap, but often unused. Yeah. They essentially identified this asset that, nobody else was properly valuing or really knew how to monetize effectively at scale.
Right. So they didn't invent the power. They found a really clever way to monetize it. What was that initial idea then?
Precisely. Their initial brilliance was matching the intense, constant energy demands of Bitcoin's proof-of-work mechanism.
Right, the mining process.
Yeah, that computationally intensive process. Matching that with this incredibly cheap green power. They managed to secure long-term contracts at almost unheard-of rates, like 2.4 to 3.3 cents per kilowatt hour.
Wow, that is low.
It really is. They kicked off with a 20-megawatt site up in British Columbia, and then they IPO'd in 2021 at $28 a share, raising $224 million, completely debt-free.
Debt-free from the start. Interesting.
Yeah, it was this waste-to-value approach right from the beginning, turning this overlooked resource into a real competitive advantage.
Okay, so the evolution of their strategy is, I think, particularly significant now. We hear a lot about a pivot to AI. What exactly does that mean for Iris Energy? Are they leaving Bitcoin behind?
Well, that's the interesting part. The pivot to AI, especially after the Bitcoin halving event in 2024, it isn't really a replacement for Bitcoin mining. It's better described as a symbiotic evolution.
Symbiotic. How so?
They're deploying NVIDIA GPUs for AI training alongside their Bitcoin miners. And here's a clever bit. The heat generated from the Bitcoin mining can actually help with cooling the AI hardware. So there's a real synergy in their operations.
That's smart.
Yeah. And this expanded strategy, it's had a profound impact. Their revenue for fiscal year 2025, which ended back in June, hit $501 million. That's a phenomenal 168% year-over-year increase.
Okay, $501 million, 168% growth. But it sounds like they're trying to master two incredibly hungry beasts at once. Bitcoin mining is notoriously volatile, and AI data centers demand immense constant power. How resilient have they actually been? The crypto world has seen some massive downturns that crushed other companies.
Right, and that's a crucial insight here. Their resilience is remarkable. They didn't just survive the brutal 2022 crypto winter, they did it completely debt-free.
Unlike many others.
Exactly, unlike many peers who, frankly, went bankrupt. Even when Bitcoin prices were down, 70% at one point, Iris Energy was still mining profitable.
Because of the cheap power.
Because of those significantly lower power costs we talked about, that initial waste-to-value approach really became their strong differentiator, their crucial moat against market downturns.
So where does the balance sit now, revenue-wise?
Currently, Bitcoin mining still makes up over 90% of their revenue. AI is ramping up. It's about 10% now, but, and this is key, it boasts these impressive 98% margins already.
Wow, 98% margins on AI.
Yeah, and they're targeting 10,900 NVIDIA GPUs by the end of this year, which brings us to a key question. Can their leadership truly master both of these rapidly expanding domains simultaneously and keep executing like this?
That's a great segue. Let's talk about the people at the helm, the Roberts brothers, Daniel and William. Do we see them primarily as visionaries driving strategy or more as operators focused on execution? And maybe critically, does that family dynamic present a unique risk or maybe a distinct strength, especially with this kind of massive growth?
It's definitely a compelling dynamic. Daniel, who's co-CEO, he seems to be largely the visionary. He brings 17 years in energy trading from Macquarie, and he's been involved in crypto since way back in 2013. He saw Bitcoin from the start as energy-backed.
Okay, so the big picture guy.
Right. William, on the other hand, he's definitely the operator. He's focused on the boots-on-the-ground execution, meticulously building out their infrastructure. He draws from his banking roots. And, they actually bootstrapped this company to its current $9.2 billion market cap without any major scandals, which, frankly, is quite a testament to their combined capabilities.
Yeah, navigating crypto without scandal is notable in itself.
Absolutely. And their ability to successfully navigate that 2022 crypto crash and then pivot effectively into AI in early 2024, it speaks volumes about their adaptability and leadership under pressure. Plus, the recent addition of Anthony Lewis as CFO in September 2025 that further bolsters their financial leadership as they scale. It adds that professional depth.
Okay, that blend of visionary and operator plus professional finance leadership sounds powerful. So what does this mean for their alignment with shareholders? Are they in it for the long haul or just chasing short-term gains?
Well, their compensation structure seems to show clear alignment with long-term growth. Daniel's options, for example, are tied to this incredibly ambitious $400 billion market cap goal.
400 billion.
Billion, yeah. It demonstrates a strong commitment to massive future growth, not just, incremental gains. Their stated vision is literally to be the compute backbone for AI's infinite demand.
Ambitious.
Very. And despite the inherent risks that can sometimes come with a founder-led company, that 228% revenue growth we mentioned clearly demonstrates strong execution so far. Plus, they have proprietary cooling patents and this preferred partnership with NVIDIA, which locks them into a key high-growth ecosystem and gives them a significant advantage.
Okay, let's switch gears to the numbers then. As of September 2025, how healthy is Iris Energy financially? Stock's around $33.96. Is it a deal or is it just riding the AI hype wave?
Well, if we connect this to the bigger picture, Iris Energy just had its first profitable year in fiscal 2025. They reported a net income of $86.9 million on that $501 million in revenue.
Okay, first profitable year. That's a milestone.
It is. And that staggering 168% year-over-year revenue growth. It's a strong indicator of their operational efficiency and just how fast they're growing.
So delving into the specifics, what are the key financial highlights that really jump out? What do we need to know?
I'd say there are three critical points that really define their financial health right now. First, profitability.
Right.
Like we said, that $86.9 million net profit for FY 2025, it shows they've turned the corner into consistent earnings.
Right.
Second, high margins. Their Bitcoin mining margins are an impressive 70%. That's significantly higher than peers who typically sit around maybe 50%. And again, this is directly tied to their foundational advantage, those extremely low power costs.
Makes sense. And the third?
Third is low debt. They have approximately $550 million in cash sitting there against only $50 million in debt. That results in a very low debt-to-equity ratio of just 0.15.
So they're building with cash.
Pretty much. They're largely building and expanding with cash, not relying heavily on external financing like some others in the space.
Okay, these financials, low debt, high margins, first profit, they paint a very strong picture. But digging into the sources, we see this negative free cash flow figure around minus $316 million. Now, for many listeners, that's an immediate red flag. How do we reconcile that with a company that just hit profitability?
Yeah, that's a really important point, and it may be a bit counterintuitive. While negative free cash flow often signals trouble, for Iris Energy right now, it seems to be a deliberate, strategic choice. A power play, you might say.
How so? A deliberate negative cash flow.
They're funneling cash, their own cash, not debt, into rapidly building out their future capacity. They're essentially pre-funding their expansion in a very capital-intensive industry. Think of it like building new factories ahead of demand.
Okay. So they're investing heavily in future capacity, pouring cash into new sites, new GPUs.
Exactly. Rather than being weighed down by debt like some competitors, it's a strategic choice, leveraging their substantial cash reserves to build out that green energy compute infrastructure for tomorrow.
Okay, that context is crucial. So given all this profitability, high margins, low debt, And this intentional negative FCF at 18 times enterprise value to revenue, which is a common valuation metric, is Iris Energy still undervalued compared to competitors? They often trade in the 20-25x range, right? It's a key question for investors.
It is. And look, analyst price targets like BTI's 32-day target issued just on September 9th, they suggest there's still potential room. When you look at intrinsic value estimates based on discounted cash flow models,
Which look at future cash flows.
right, forecasting future cash and discounting it back to today's value.
Yeah.
Those models put the range somewhere between $25 and $45 per share. And some estimates suggest it's undervalued based on projected 2027 free cash flow, maybe around 1.5x.
So potential upside still, even after the big run-up.
It indicates that despite the recent surge, there could still be significant upside if, and it's an if, their growth trajectory continues as projected, especially given that unique cost advantage they have.
Right. Well, in any investment, there are always two sides. Let's talk bulls versus bears. What's the bull case for Iris Energy, and what's the bear case, drawing from what analysts and others are saying?
Okay, the bulls are essentially betting on this massive total addressable market, or TAM, for both AI and Bitcoin. And they see Iris Energy powering that future with its unique green energy advantage.
How big a market are we talking?
Well, some see AI demand hitting an astonishing 100 gigawatts of power. And you have forecasts, like from ARK Invest, suggesting Bitcoin's market cap could grow to maybe $20 trillion to $100 trillion by 2030.
Wow, huge numbers.
Huge. And Iris Energy's current pipeline capacity, which is around 2.91 gigawatts, that could potentially translate into, say, $3 billion to $4.5 billion in annual revenue down the line. Morgan Stanley even projects a net present value of to $3 billion just for their one site in Sweetwater, Texas.
Okay, that's a strong bull case. Big market, unique advantage. What about the flip side? What worries the bears? What could derail this?
The bears, well, they focus on execution risk. Things like potential delays getting approvals from ERCOT.
That's the Texas grid operator.
Yeah, their permits are vital for building new sites in Texas. Or potential delays in getting GPU deliveries from NVIDIA, which could slow down their AI expansion. There's also concern about shareholder dilution, meaning issuing more stock to fund future growth, given their projected capital expenditure is over $600 million to build out these ambitious plans.
Right, that costs money.
It does. And of course, there's the, you could call it fatal dependency on Bitcoin's price volatility. Bears worry about a significant drop in Bitcoin. Say if it falls below $50,000, that would obviously hit their main revenue stream hard.
Okay, execution risk, funding needs, Bitcoin price. So when you weigh those arguments, the massive potential versus these risks, which side does that green energy moat favor more, in your opinion?
That's the core question, isn't it? And I think the green energy moat isn't just about lower operating costs. It's really Iris Energy's core defensive and offensive weapon.
How so?
Defensively, it means they don't just survive crypto downturns when others fail, like we saw in 2022. Offensively, it means they can potentially aggressively outcompete in the energy-hungry AI race on cost. This unique insulation from energy price volatility fundamentally shifts their risk profile.
So it tips the scales.
I think it undeniably favors the bull case more strongly. While the execution risks and the market volatility are absolutely real concerns, having such low, locked-in, long-term power costs provides this massive buffer. It seriously mitigates some of the key bear arguments, especially compared to competitors paying much more for power.
Okay, let's hone in on that moat then. Let's talk about the true moat of Iris Energy. You're saying it's not really Bitcoin mining itself. Is it something deeper that gives them that sustainable competitive edge? And what's the future vision they're painting?
Yet what truly stands out here, and this is critical for listeners to understand, is that their moat is not Bitcoin mining per se. Lots of people mine Bitcoin. The core asset, their truly defensible competitive advantage, is their access to cheap, long-term, remember, 10 to 15-year contracts, renewable power.
That's the foundation.
That is the foundation.
Yeah.
That's what allows them to undercut competitors on cost, even significantly cheaper than, say, peers like Marathon Digital. It's about owning the critical infrastructure, too. Owning their substations outright, which gives them control and cost certainty, having those proprietary cooling patents, and especially that preferred partnership with NVIDIA. It locks them into that key AI ecosystem.
Owning the substations, that seems like a big deal for controlling costs and operations.
It is. It avoids reliance on third parties and gives them much more direct control over their power infrastructure.
So connecting this foundation, this moat, to the bigger picture, what kind of scale are we really talking about for the future of Iris Energy? What's the grand vision if they execute successfully on this strategy?
Well, their future vision is just immense scale. They're looking to grow from their current roughly 11,000 GPUs to potentially 100,000 GPUs.
Wow, nearly tenfold.
Yeah, becoming a truly massive player in compute infrastructure. Analyst estimates are projecting revenue in the range of $2.2 billion, maybe higher, by 2030 as AI continues to scale. Some really bullish forecasts are suggesting even $4 billion to $7 billion if they fully realize their potential.
So the implication is huge.
The implication begs the question, can they effectively become this combined energy and computation giant, truly leveraging that green power advantage across both fields? They do have key catalysts coming up, like their November earnings report and updates on the Sweetwater site development in Texas. Those will be crucial indicators for investors.
So despite the execution risks,
Despite the execution risks, that strong green energy moat significantly mitigates many concerns and makes the ambitious vision seem, well, tangible.
okay. Given this unique positioning and the potential scale we're talking about, some might call this an asymmetric bet, right? Where the
Okay.
downside might be cushioned by the low costs, but the upside could be explosive if AI and Bitcoin continue their trajectories. From your perspective, what is the potential upside here if they execute well?
Look, based on current analyst models and market outlooks, a base case potential could see the stock maybe achieving a 3x return from its current price, around $33.96. That assumes, of course, continued AI and Bitcoin market growth and successful execution on their expansion plans.
Like potential 3x.
Potential, yes. And the foundation of cheap green energy arguably makes that upside potential more robust than it might be for a typical energy-dependent tech company facing volatile power costs. It provides a structural advantage for you, the listener, to consider. So just to recap our deep dive today, we've really traced Iris Energy's journey from cleverly monetizing stranded hydro dams to becoming this potential backbone for AI compute. The Roberts brothers, the co-founders, seem to be delivering on their vision so far. And their financials show that impressive first profit, high margins, low debt, and this aggressive, intentional growth strategy funded by cash. While the bears definitely point to market volatility and execution risks,
Which are real.
which are absolutely real. The bulls highlight the massive TAM in both AI and crypto, and, maybe most crucially, that undeniable green energy moat built on those long-term, low-cost power contracts.
Yeah, a truly unique approach, turning what others saw as waste into a core strength. It feels like in this gold rush for AI and crypto, Iris Energy is making a bet that the real long-term winner isn't just the prospector, but the one selling the green-powered pickaxes.
That's a great analogy.
So for you, our listener, we always encourage you to do your own research. Check out Iris Energy, ticker IREN, look at their investor relations site, review other sources, and form your own informed opinion. As always, this is not financial advice, just insights to help you be well informed.
Absolutely.
Thank you for joining us on the Deep Dive. Next time, we'll be tackling the ever-evolving, very intense world of AI chip wars. Should be fascinating. Until then.
And maybe just one final thought to leave you with. Consider this. As the world increasingly demands sustainable solutions, is Iris Energy simply another tech company playing in crypto and AI? Or are they actually pioneers in a new era where energy infrastructure itself defines technological leadership? Something to think about.